Hey guys, welcome back to another live trading video. Today I'm taking a look at USDCHF and I'm looking to go long here on a pullback. And in this video, what I'm going to be doing is going start to finish on this trade, giving you the chance to watch a real Forex trade beginning to end without hindsight in my favor. And if you appreciate that, make sure to hit the thumbs up button and let's jump in. Okay, so taking a look at USDCHF, what we can see here is that just in recent price action, I've been really busy on the dollar Swiss. In fact, you can see all my previous orders. I'm logged into my broker, so this is a live account. You can see the trade that's being placed on my account and all that sort of stuff, my entries and that sort of thing. But with that, a lot of trade history is on this screen, and I've been trading this thing really consistently. So I bought here, closed here, bought here. This one actually was a loser. Bought here, closed in here, bought here, closed in here. You get the point. I've been very busy on the dollar Swiss, and today I'm back in it for another attempt on the long side. Now, I'll go into some more details on the bias and why I'm looking for longs only, but first, we'll take a look at the technicals and why I'm in the trade, as well as my stop loss and that sort of thing. So price broke out. We had a big break to the upside. This was a key indication for me to look to be predominantly on the long side. We broke out here, we retested, we broke, right? We continued to make a push to the high side. Now, recently, we have now officially come back into this area of value. Now, I am looking for this level of support, which was at one point to be as resistance, right? It was resistance, now turned support. I'm looking for this level to hold and potentially give me a nice entry to ride this thing back to the upside. We have some context here that we'll need to discuss in terms of fundamentals. We have November 2nd, the Federal Reserve has a meeting or they're going to be releasing their interest rate decisions, which will probably drive markets all over the place. Although with that lead up, I'm looking for some bullishness on the dollar. Now, in terms of a stop loss, underneath this level that I marked out, I basically have my stop pretty tight. So if price comes down and fails in this area and shoots to the downside, that's just going to be my cue to go ahead and cut the trade. From there, it is what it is. The market just clearly did not react the way I'm looking for. I have 99,000 units open, which is just about one lot, 1.00, but this is 0.99 lots. And I am risking $400 with just 40 pips of a stop loss. So not a big stop loss for a swing trade, but looking to see if I can catch this at a pretty good point. So again, it's going to have to react pretty quickly. Otherwise, I'll be out for a small loss of $400 on the account. Okay, so where are we looking for this thing to go? Well, if we get to the highs, we can actually show the risk to reward ratio. And we can actually see, like if I mark this up and we just get back to the highs, this would be a 5-to-1 risk to reward trade, which is phenomenal. So that would be the ideal situation, in which case I could look to trail stops and try and lock in a really big winner. If you're confused about my strategy, what I like to do is I like to trail stops and follow trends. And what that tends to mean is I don't use a take profit to close my trades. What I look for is instances in the market where things rally and then I'm able to lock in stops behind market structure. So let's say, on a rally, I'm able to lock in my stop loss after a higher high, right? So that sort of concept. And if you watch enough of my trade videos, you'll see scenarios in which case I do that. It's not every trade. And again, we're just gonna have to see if it's this trade or not, as I don't know the future. But with that said, my stop loss is in place. And from a technical analysis point of view, this is a simple trend following pullback setup. On top of that, we'll talk about the Edge Finder, which is our market scanning tool that I use to help find the trades that I take. And looking at the Edge Finder, what we see here is that the USDCHF has a buy bias currently, with the idea of that being broken down here in the score chart summary page, or a score chart summary area. We can see that the commitment of traders data, or COT data, comes out at +2. And what this is showing us, by the way, is that if we zoom in here, we can see that the dollar, in terms of the commitment of traders, down here, the commitment of traders data shows us that the dollar has a 78.56% long ratio. That is a very high holding of on the long side by institutional traders. Conversely, we can see the CHF is actually the opposite, a high net short ratio. So knowing that shows us that, okay, hedge funds, smart money is seemingly buying the dollar, selling the Swiss franc, and that gives us a +2 bias on looking for long setups on this pair. That's a big chunk of it. Of course, we also have a couple other factors. Seasonality, for one fact, would be the month of October and November is historically a positive month for this currency pair, meaning that during these months they tend to rise, or the dollar Swiss tends to rise. So these things play into my factor of a +1 trend reading. We have a nice upward trend that gives us a +2. And then in these categories, you can see these things favor the Swiss franc, GDP growth, inflation, and unemployment, as this is pink. That's showing a bias to sell the dollar by the Swiss franc. And then of course, interest rates coming out +1, meaning that interest rates are higher in the US, making the dollar the more attractive investment vehicle for foreign investment. So all of these things combined, you guys, you can of course read up on this if you'd like to pause the video and zoom in, or just take some time to read over the edge finder. You're welcome to do that. And so I also shared this inside of our private group inside of the Discord channel. So every trade I take, I share the full breakdown for members to fully understand why the trade is there. So if you'd like access to that, the link will be down below in the description. So now I'll pause the video and we'll come back once things get moving again.
Attention traders, this is not a drill. Here at A1 Trading, we are giving away $500. That's right, you heard it. $500 plus a gold VIP membership. Now with the gold VIP membership, you only got to pay one time, but here we're just going to give it to you, plus $500. How does that sound? For the whole month of October, by the way. So make sure to click the link in the description, enter the giveaway before the month is over. By the end of the month, one winner will receive a text message, so make sure that phone number you put in is correct. The winner will receive a text message from us indicating that they have won. So good luck, everybody.
All right, guys, so taking a look at USDCHF, you can see price did ultimately come down and stop me out for a loss here. So you can see my two little blue and red candle or arrows. These are where I got into the market and where I got out. So you can see, tried to buy that support level with the idea of 99,000 units to the upside, with the idea that, okay, past resistance could hold again. We saw it rally here, and we were just in a range-bound environment. So basically, as we came down into this area, I was considering that, you know, we're sort of just chopping before a potential continuation. We did not get that continuation, and that's why when you listen to traders or people who have some experience, you'll not hear certainties in their voice, right? So when you take a trade and you put a stop loss on your trade, you know you're putting a stop loss there for a reason. It's because even though you might have a very strong conviction about a trade and have a good reasoning behind that trade, it can still change its mind. And what we're seeing right now is a little bit of a swing into the risk on environment when it comes to markets. And what I mean by that is the stock market is up in the last day or so. You can see here's US 30 just to give you some reference. So the stock market is rallying on this, and the dollar has been playing off of a lot of the stock market's weakness. Those things have gone hand in hand, right? With the dollar strengthening tremendously because the Federal Reserve talking about raising interest rates. That's been what's really hurting the equities market, right? Well, we saw a little bit of optimism on good earnings recently, which has actually shifted a little bit of the bullishness on the dollar, as well as made the stock market rally pretty good. So with that, of course, not ideal for my personal trade on USDCHF, as this did end up falling apart at my support level. But it's okay. I think there might be some more opportunities that I'm going to take advantage of here in the remainder of the week. So with that said, here, there's your final result, a loss of about $400 on USDCHF, and we move on. A loser is just a loser. In the grand scheme of things, it's not about one trade, it's about the next 1,000. So thank you guys for watching, and have a great day. It looks like you made it to the end of one of my videos. Thank you so much for supporting my content. It really means the world to me. And down below in the description, I've put together some of my best resources for aspiring traders who are looking to improve. I've got some free downloads that could help you, some broker recommendations, and if you'd like to join our Discord or get access to some of our trading software, all of that will be linked down below in the description. Thanks for watching, and we'll see you next time.